Here we are today on the 4th episode of Forex Trading Blueprint. I decided to use today to discuss the basic terms and concepts of Forex trading because I believe they are very important. The reason why this episode is very important is because in my next video, I'll be diving into candlestick patterns and the real technical analysis. I wouldn't want to restrain myself and limit the words I use during the candlestick pattern and the technical analysis session. When we start the real technical analysis and start discussing candlestick patterns, I'll be using some technical terms and concepts, so it's better I explain such terms and concepts right now so that all my trainees will be on the same page, and during the process of analysis nobody will be confused. This particular episode is going to be fun and interesting because I'm going to be sharing with you the private slide I prepared for my trainees in my Forex Academy, where I place different people coming into the Forex industry into different categories, category A to H. You know the drill, right? And you know how we do it in this channel. Just watch this video to the end, and if you found the information I shared in this video very interesting, why not subscribe to my channel, hit the bell notification, and also give this video a thumbs up. Today is going to be our last class in terms of this foundational stuff we are doing. There you get. This is going to be the last day. So our next class after today, we are going to be dealing much on technicals. We'll now go into the real technicals. I've been able to build up a lot on introduction, trying to give you the correct mindset and the psychology you need to start trading. Then I've also been able to emphasize on the fact that forex trading has to do with your ability to understand candlesticks. That candlestick is the basis of forex trading, right? And there's something I also wanted to show you before we go into it. There is one of my students in our Forex Academy that was asking me, why candlesticks? Because if you look at this place, I hope you can see my mouse. Then this place I'm pointing my mouse, you're going to see where they wrote candles. This place, you're going to see this place now. They wrote candles there. Then if I switch, if I click on that place, you're going to see that apart from candles, we have hollow candles. Are you seeing? I've changed my chart to hollow candles. Apart from these hollow candles, you have line charts. You see that here I've switched my chart to line charts. What it means is that for me to make any trading decision, the line chart is what I need. I have to understand and interpret the line chart for me to be able to make any decision. Then apart from line chart, we have area. These area charts. You can use area chart to analyze and also know when to buy and when to sell. We also have HLC area chart. But then research has been done and we've come to the conclusion that candlesticks is the best. Candlesticks is the best. Why? Because candlestick gives us a lot of information about what is going on between buyers and sellers. And remember I told you that the more information you can be able to get about what is going on between buyers and sellers, the more informed decision you'll be able to make. Let me say it again. The more information you can get, the more informed trading decision you can be able to make. Now, talking about candlesticks, you'll be able to see that candlesticks gives us information about the type of information we can get about candlesticks. That candlesticks will reveal to us the open price and also the close price of the markets at a particular session or at a particular time frame. You won't be able to get this information from line charts. You won't be able to get this information from area charts. Now, candlesticks will also show us and give us information about the momentum. You understand? About the momentum of the buyers and the sellers. That is the information we get from candlestick body. That candlestick body reveals to us a lot of information about the momentum. I don't know whether I spelled this thing very well. The momentum of the selling and the buying pressure. Do you understand? That is the information we can get, and candlestick body gives us this information. Another information we can get from candlestick is that candlestick gives us information about the highs. Right? Candlestick will give us information about how high buyers were able to push the market. And the D, candlesticks also give us information about how low sellers were also able to push the market in that particular time frame. Can you see it? So candlestick gives us a lot of information which we might not be able to get from line charts. We can't be able to get this information from HLC area charts or even hollow candles. That is why we've decided that candlestick is the best charting method And that is why we also pay serious attention in understanding and studying these Japanese candlesticks. This is going to be the final introduction I'm going to do about this. Now, before we now delve into this, the reason why I want to share and explain this particular presentation I have here is a Microsoft document, Webster Forex Academy, I prepared for my students in our academy. The reason why I want to show you this slide and also show you some things from this slide is because when we start going into technical analysis in detail, I'm going to be using some terms, right? There are some terms and some concepts I'm going to be using. And I wouldn't want to restrict myself when speaking, so that if I say TP, stop loss, or I'm mentioning some concepts, I'll be scared that maybe my student doesn't even know what it means. That is why I want us to just do a little introduction about Forex. Then I'll be able to explain to you some basic terms and concepts about Forex trading, right? So that when we start going deep into technical analysis, maybe on Saturday, Saturday might even be our first technical analysis class physically, where we'll talk about candlestick patterns. We study all the candlestick patterns and also develop a working trading strategy. So now in this PDF, this is the PDF I prepared for my CPA marketing, Unlocking Financial Freedom, how Forex trading is powering the greatest wealth transfer of our time. Emmanuel, I bet it to you that Forex trading is actually, in fact, there is one statement I used to tell my students. I'll tell them that so many young people are going to miss the greatest wealth transfer in the history of the world because they don't understand how Forex works or how Forex markets work. So many people are actually going to miss a lot. In the next 10 years or in the next 5 years or even in the next 3 years, there is going to be very strong wealth transfer. Forex traders and those that understand how Forex works, even if you're not even a trader yourself, but you understand how Forex works and you are investing in Forex markets, you are going to be among those that will benefit from this wealth transfer in the nearest future. But a lot of people are not aware. They're just there, right? And that is one of the things I'm going to be discussing with you in this PDF. So now I will just show you in this presentation, okay, what are some of the presentation insights I'll be talking on. You'll be able to discover the following: introduction to Forex trading and basic concepts of Forex trading. This is even the most important aspect to me. I want you to be able to understand the basic concepts of Forex trading. I want to also give another deeper introduction to Forex trading. I'll also show you how to make money from Forex trade even without doing technical and fundamental analysis. Yes, I remember the reason why I included this in this presentation is that I used to have a lot of older people in my classes. Most of them will be scared. Is there a way we can be able to make money from Forex even if you cannot do the analysis ourselves? Yes, the answer is yes, but it's not for you, Emmanuel. I am training my young trainees, my young students to be able to have in-depth understanding of the Forex market, and so that they'll be able to make financial decisions and do the technical and fundamental analysis themselves. However, anybody that don't even want to trade for themselves, there's an opportunity for you to make money from the Forex industry, right? This is one of the things I will be showing them this video. Then so we'll be showing you and we'll be learning also some of the benefits of Forex trading. Of course, everybody know that Forex trading is very beneficial. I also show how to join my premium signal group and start making money immediately. How to open a Forex account and register with a recommended broker. Those ones are for those that are not aware yet. So I'll be jumping some things. Are you new to Forex trading? Yes, for those that are new to Forex, yes, worry not, because here in Webster Forex Academy, that's our Forex Academy, we usually take you from a newbie or amateur trader to a professional trader in a record time. That's exactly what we do there. Of course, about a lot of people used to ask me, who is this young man? I've spoken in a lot of conferences here in Oka where I talk about Forex. The question is, who is that young man, right? My name is Cesar FS. I'm Dennis. I'm a professional Forex trader and a financial market analyst. I have a professional certification in FMVA. This FMVA is Financial Modeling and Valuation Analyst. And I'm also certified in BIDA, Business Intelligence and Data Analyst from the United Kingdom Corporate Finance Institute, CFI. I have over 4 years experience trading and analyzing the Forex and static indices market. So I've even trained and tutored a lot of students, both online and offline, on how to master the skill of technical and chart analysis. And by the special grace of God, Emmanuel, you are one of my students right now this year. And the Webster Forex Academy is a platform we created here in Oka to build and raise the strongest trading community in the Southeast. We are actually taking it to the next level this year because we want to also hold a very strong Forex conference that will be organized by I and my team in our Forex Academy here in Oka. It's going to be very interesting. Of course, this is me. This is my sensitive case because some people will not believe you. They will think that when you are telling them about risk management, when you are telling them how to analyze the chart, and when you are emphasizing on risk management, they will think you don't know what you are doing. It is because of the experience I've gotten over the years and how tough I've seen it. I've studied and further that for you to be able to stay relevant and also stay long in this Forex industry, you must be able to manage your risk very well. These are some of the professional certifications and training I've done. This training involves risk management, involves technical analysis, and involves a lot of things. And that's why I have the knowledge and the competence I have right now to be able to speak about Forex and teach anybody how to be successful in this Forex industry. Right? Who is our Forex Academy for? Some of them will be asking. I have not traded Forex before. In fact, I have not even placed a single trade in my life before. As I'm speaking to you right now, I don't even know what a PIP, plus size, SL, and TP is. Because now I've been able to classify people, especially my trainees, into category A. Those that are classified into this category A are those that are total newbies in this Forex industries. They don't even know what Forex is, but they know that they can make money from it. I usually welcome them and I tutor them. As there are those that are classified under category B. These guys are those that will tell you that I am already a Forex trader, but I am not consistently profitable. I will make $100 today and lose everything next week. Imagine what I'm telling you is correct and true. And this thing can apply to anybody, especially you as you are starting. So I want you to put all these things into consideration. Some of them I classified under category B are people that have been trading Forex for some time. Somebody will make $100 today and lose everything next week. Make $200 tomorrow, lose it again next tomorrow. There is no consistency. Why? Because of lack of risk management. So we welcome such people into our Forex Academy and tutor them on the principles of managing risk to be profitable as a Forex trader. Category C are people that, these guys are the people that will tell you that, Dennis, I have little knowledge about Forex trading. It is something I really want to do, but I don't know who will teach me in a way that I can understand. These people, I classify them as category C people. And we also welcome them. I welcome them to my personal mentorship, the Forex Success Blueprint, and also in our Forex Academy. I also have those that are classified as category D. These guys are the people that will tell you that I am a profitable trader, but I'm looking forward to joining an active and innovative trading community where I can connect with other Forex traders and expand my network. If you belong to this category, I usually tell them you are welcome. Some people are profitable already, right? But Forex trading is boring if you are doing it alone. Forex trading is better if you have a community where you share ideas, speak to when you have losses, and also get encouragement from. That's also what we do in our Forex Academy. We have those that are classified as category E. Yes, these guys are the people that will tell you, Dennis, what's up? I know that there is high potential of wealth creation in the Forex industry. I really want to be part of the people making money from the Forex industry, but I don't want to analyze the chart and make trading decisions by myself. So people are just too scared of doing the analysis by themselves, but they desire to make money from the Forex market. Such people, I also welcome them, right? Because I can analyze for you and give you trading signal for you to take and trade if you don't want to do the analysis by yourself. So now we also have category F. These guys are the people that will tell you, I want to learn Forex, but I think I am too old to understand the concepts. I have one man in my Forex Academy who is up to 60 years old. He came to learn Forex. He was like, I want to learn this thing, but I think I am too old to understand the concepts. Moreover, the fee for intensive Forex trading is colossal, and I don't know if I can afford it. We also welcome them in our Forex Academy because I have this, I don't know whether it's a gift. I can break any tough concepts and make it very easy, even for newbies to understand. This is what I do, right? Then our academy is not for you if, remember there was the time I told you, Emmanuel, there was the time I was discussing something on trading psychology, and I told you that if you have this type of mindset, please don't come close to me, right? I have a lot of people in Oka here that will come with this type of mindset. Maybe you've done Yahoo for years without cashing out, and you are in desperate need of money using the get rich quick mentality. You just want to come today, fund $100 and you want to buy a car next week. With that mentality, even the little $50 you have, the market is going to take it away from you. So I don't deal with such people, right? I don't deal with such people unless you are ready to change your mentality. So I usually tell them, I will show you how to get results like this. These are some of the results, those that registered in our Forex Academy. These are the trades they took. What you do just today, we'll just do analysis and drop signal, and everybody will take the trades. I was telling you this in one of our classes where I told you that the amount of money you make depends on the balance in your account. This person that made $8 from a signal has $158 account. This person made $30 from a $1,000 account. Are you seeing? The amount of money you make depends on the lot size you use and the capital or equity you have. And I told you that you are going to be funding your account, real account, so that while you are learning, you'll be taking trades. Because if you fold your hands and keep on learning and you want to come here and do it after 1 month, you are going to be frustrated, right? So that is what my plan is. The good news is that you'll be able to achieve this result even if you've not traded the forex market before. This is not the issue of I've not traded, whether I've traded before or not. You can be able to achieve results that I've showed. Those results I've showed you are people that don't even know what forex is. All they did was just, I said, buy GBP USD or buy SAUSD. They will buy and they will make money. Yes, are these results possible? Of course. These results and more are possible using the Webstack Forex Signal. You'll be able to copy trades from professional traders like me and also make the same profit that we'll make. We'll also add it to our premium signal channel. Those results are trades from our premium signal channel. Of course, you know, not everybody, no matter how you teach them, will be able to make trading decisions by themselves. But I believe you are going to be able to learn it. Brief introduction about Forex trading. I just want to introduce you so that you'll be able to know what Forex is all about. Many people are misunderstanding the concept of Forex trading. I welcome you, guys, because today we'll be discussing Forex trading, an exciting and potentially lucrative investment opportunity that anyone can participate in. Literally anyone. Forex trading involves buying and selling of currencies, and the goal is to make a profit. It is a global market that operates 24/7. Stating indices market operates 24/7. Forex market operates 24/5. You should know that by now, right? I might still lay more emphasis on this. So that is what Forex is all about. It's Forex trading. Forex trading is also known as foreign exchange trading. It's the process of buying and selling currencies on the global market. It is one of the largest and the most liquid markets in the world. Like I used to say it, the largest and the most liquid market in the world, financial market in the world, with an average daily trading volume of $7 trillion. The average trading volume is $7 trillion. So why won't every young person learn this skill so that you'll be able to participate in this market and make small amounts of money for yourself daily from this $7 trillion that is floating in this market on a daily basis? So why should I learn Forex? Somebody will ask me, why should I learn Forex? And I will tell the person that the question is, why shouldn't you learn how to trade Forex? Learning how to trade Forex can be a valuable skill for young people, offering several potential benefits. There are a lot of benefits you can get from learning Forex, learning how to trade Forex. I won't even waste time on this because you already know. Number one on this list is financial independence. Forex trading can provide an opportunity for young people to achieve financial independence and not rely solely on traditional employment for income. When you learn how to trade this Forex, man, you'll be able to make a lot of money without relying on jobs only. Flexibility, low barrier to entry, leverage, global market exposure. These are the reasons. Key development. I will still send you this PDF so that you have a personal copy for yourself. Online accessibility. Forex trading can be done online anywhere with an internet connection, making it convenient for young people to participate. Those that are tech savvy can participate. There are other reasons why I will encourage anybody to learn how to trade Forex. Additional income stream. Even if you have a day job, you can still learn how to trade Forex and add the Forex money to your sources of income. Networking opportunities are there. Learning about economics and finance is also one of the reasons why I encourage people to trade the Forex market. Now, what is Forex? What is the goal of Forex trading? Of course, you know the goal of Forex trading is just for you to profit from the changes in currency exchange rates by buying low and selling high. I've shown you the charts on countless occasions, right? Forex trading involves a lot of technical analysis and market research. Traders uses various tools and strategies to identify trends and predict future price movement. What you do here is to analyze, use so many tools and techniques and analyze the chart and predict various movements in price, especially movements in price in the future. So who is a Forex trader is a very big question. A forex trader is an individual or entity that engages in the foreign exchange market or FS market by buying and selling currencies with the aim of making a profit. That is who a forex trader is. Our goal is just to analyze, look at the case. I think I've told you about this. The case of profitable forex trading. You must understand TA, technical analysis. You must be very good in risk management, and you must be good in trading psychology. In fact, I don't even know how to lay more emphasis on this, but you know, when you see a chair or a stool, when you see a stool like this that has 3 legs, this is how these cases are. The 3 legs of a stool are very important. If you remove one, which is technical analysis, the stool will fall. If you are good in technical analysis and you remove risk management, the stool will still fall because you go below account tire. If you are good in technical analysis and risk management and you are not good in trading psychology, that one is the worst. The stool will still not be able to stand. Have you seen why these key concepts are very important? And I promise you that I'm going to spend a lot of time to make sure that you understand these things and then apply the rules and the techniques I'm going to be teaching you. So is forex trading risky? Yes, I've seen this on countless times. I'm not the type of person that will sweet talk somebody to go and start trading forex. I won't see you on the road and I'll start convincing you the way Jehovah's Witness people used to preach so that believers will repent. Forex trading is not the gospel where you come and meet somebody on the road and start preaching to the person, come and start trading forex. No, I know some people do it, but it is wrong. Because this business is fucking risky and it takes a lot of time for you to master this skill and become profitable. If you beg somebody to come and learn it so that next week the person will make money and pay house rent, you are lying to the person. This person must be able to understand the risk involved and also understand that with risk management, you can control the risk. And also understand that you are not coming here to make money quickly. You are coming here to master a skill, a business that when you master in the long run is going to change your financial situation. So I don't beg anybody to come and learn from you. You must approach me. And when you approach me, I will make sure that you are ready and you are willing to dedicate the time and put in the obnoxious amount of work needed for you to make money from this industry. So where I want to learn the key terms and concepts in forex trading. What are the key terms and concepts in forex trading, right? I mentioned them here. Currency pair, you already know. We trade currency pair. In forex trading, currencies are always quoted in pairs, right? Such as you see pair like Euro USD for those trading for markets. You see Euro USD. You see GBP JPY. Do you understand? The first currency in the pair is the base currency. The base currency here is Euro. Why the second currency is the quote currency. The quote currency here is what? USD. If you see something like GBP USD, you should know that the base currency pair, the base is the GBP, while the quote one is the USD. And that is how we trade these currencies in pairs, right? So when we open the chart and start taking analysis, you are going to see it. Another important concept is bid and ask price. The bid price is the highest price that a buyer is willing to pay for a particular currency pair at a given moment. Why the ask price is the lowest price that a seller is willing to accept. The difference between the bid and the ask price is called the spread, and this represents the transaction cost of trading. So people will ask me, how do brokers make money? Brokers make money from spread, right? The difference between the bid price and the ask price is the spread. If you've taken trade before, you are going to see that if you want to buy, you are going to be seeing 2 lines like this. This is the bid price, this is the ask price. If you buy, the price will start here. So the difference between the bid price and the ask price is the spread, which is the cost of transacting with a broker. So many brokers has the different spreads. Some broker has tighter spread than the other. It is from the spread that they make money, from commission. Some brokers used to collect commission. They can make money from spread, they can make money from commission and other fees that they charge. Right? But you know what a bid and ask price is now. The difference between the bid price and the ask price is spread. What is PIP? You see a lot of friends that are mentioning PIP. The stop loss is 20 pips. Person will tell you that TPs, take profit is 60 pips. Pips is just called percentage in point. Because when we start technicals, you see me mention pips a lot. You see me mention currency pair. You see me mentioning spread, bid price, ask price. So a pip is the smallest price movement that a given exchange rate can make based on market conversion. It is typically the 4th decimal place for most currency pairs. For example, if Euro USD moves 1.100 to 1.1001. It has moved 1 pip. Are you seeing it now? When you add 1 here, it becomes 1 pip. When this one changes to 2, it becomes 2 pip. So just like in secondary school, most of you that went to school, they will tell you that the SI unit of time, I can still remember, everybody should know this, that the SI unit of time is seconds. You should know. Then that is how it is with price. The SI unit of price is pip. This is just the simplest way to explain pip to a newbie. The SI unit of price is pip. That is why price moves in pips. 1 pip, 2 pips, 3 pips, 4 pips, 5 pips. That is how price moves. It is in pips. And the more pips price is moving in your direction, the more money you are going to be making. And if price is moving so many pips against your direction, that is how much you are going to be losing in that market at that particular point in time. Right? So leverage is another important concept. Leverage allows traders to control larger position in the market with a smaller amount of money. It is expressed as a ratio. Example, 1:100. Every broker will give you leverage. I'll still show you. If you say you already have an account with SNS will give you a leverage of 1:2,000. What that means is that the broker is lending you some amount of money. Normally, as a retail trader, you can't even be able to fund account. The least amount you can fund to start to be able to open a position is $500. But with leverage, you can even fund $10 and still open a position, right? So leverage means if you are funding $100 and your broker, if you are funding $100 and your broker is giving you a leverage of 1:2,000, that means you are trading with the financial power of 100 times 2,000, which is almost $200,000 account. That is the equivalent of amount of money you are trading with. So the broker will borrow you some money and give you leverage so that you'll be able to trade. Then when you lose your $100, the broker will take away the leverage and your account will blow, right? So that is it. Margin. We also have another important concept called margin. What is margin? Margin is just the amount of money that a trader needs to deposit with their broker to be able to open and maintain a position. It is a percentage of the total trade value and acts as a collateral to cover potential losses. Like when you open a trade, for a trade to start running, the broker is going to hold a particular amount of your equity, which is called the margin. Until you close your trade, your margin will be released. Assuming you have an account of $100 and you open a trade in gold, SAUSD with 0.01, the broker might hold a margin of $10. For example, as far as this trade is running and your account is $100, you can't be able to withdraw this $10. This $10 is the margin, the amount of money that the broker is holding before your position. As far as you are holding that position, the broker will be holding that money. You won't be able to withdraw it. That is margin. We also have long and short position. When you want to buy in Forex, if you are buying, you are going long. If you are selling, you are going short. That is just the term. Stop loss order. I told you one of the risk management plan or strategy we use is stop loss. A stop loss order is a risk management tool that allows traders to set a predetermined price at which their position will be automatically closed to limit potential losses. This is what we call stop loss. We also have TP. A TP is just the opposite of stop loss. Take profit order is TP. It's an instruction to close. A take profit order is an instruction to close a position when a certain profit target is reached, locking in gains. Right? So when you hear us mention TP and stop loss, that is just what it means. Fundamental analysis involves analyzing economic indicators, central bank policies, and geopolitical events. When it comes to forex trade, we have different types of analysis you can do for you to be able to get information about the market movement. We have fundamental analysis. We even have technical analysis. And we even have the one we call sentimental analysis, right? So all these things, sentimental analysis, fundamental analysis, and technical analysis, but we focus more on technical analysis, right? Because you have enough information, enough data from the chart that you can use to analyze the chart technically. So choosing a broker, I will talk about this when next you have a class, so that you see the factors to be considered when choosing a forex broker. Of course, that will be it. I want to just know if you have question. Okay.